I just want to buy the S&P 500 at 1950. This is a limit order, okay? Hold on, please, traders. All right, it's a bit tricky trade, a bit risky trade using the commodity channel index indicator, period 14. So I'm waiting for this order to be filled at 1950. All right, I need to speak clearly for traders so they may understand my beautiful accent. All right, okay, 1950, waiting for this order here to be filled. Okay, just waiting. I'm on a 5-minute time frame using the commodity channel index indicator, period 14. This order is not yet filled. I will explain to you my trading setup, why I want to buy at that level, because there is a resistance in this zone and I don't want to be cooked, so to speak. All right, so there is a high chance that it may pull back. If it pull back, I will move my limit order to a different place when I will look for opportunity to buy the S&P 500. Okay, now as I explained to traders, if you are day trading and swing trading, be ready to buy and be ready to sell. Have a bullish watch list and have a bearish watch list. If the music has changed, well, the dance also must change. All right, so that's why I don't want to use a market order to buy straight away. I'll place a limit order at 1950 to buy the S&P 500. This order is not yet filled. As you can see, the price came quite close to my order, but it's now coming down. Okay, it's okay. All right. This is a live day trading S&P 500 using the CCI period 14. Okay. You can see also on my chart, I have the moving average period 14 on my chart, because if one is using the CCI period 14, one must also place on the chart moving average 14. If one is using CCI period 20, one must also place on the chart the moving average period 20, because the CCI indicator is measuring the deviation of a financial instrument in relation to a specific moving average. All right. If you want to know more about CCI trading, all right, you need to go to www.dayprotrader.com, click on Pro System. All right, we will talk about double CCI trading system or dual CCI trading system, and also you also learn about how to trade overbought and oversold CCI and avoid CCI trading mistakes. If you want to become a top CCI trader, you need to subscribe to our YouTube channel, www.youtube.com/user/dayprotraders YouTube channel. All right. So here we are, still waiting for this order to be filled. You look at this pattern for the CCI. You see, when the CCI, you see, it went up to the level of 200, all right, and then it pulled back. You see how it went too fast? It went very sharp. Okay, this is quite bullish. The momentum, this is about the speed. Okay, the speed. Okay, is alerting that the price has a high chance to go fast, but this is just a warning. Okay, just a warning. All right, it's not the signal yet, but if the price start going, why am I talking about? Okay, let me show you something. Go to the daily chart at least. All right, so on the daily chart, what do we see, my friend? Pay attention. We are looking for a trading setup. Without a valid trading setup, there is no valid trading signal. The trading setup is the foundation or the source of the trade. We want to spend most of our time on the trading setup, high probability trading setup. Okay, so we have here a double bottom chart pattern, which is a validation of a support level. The level that we are talking about is 1845. The price has validated that level of 1845, okay, as a valid, okay, support level. Okay, all right. So that level of 1845 is the opening price of 2014. It's a key level, this level here. All right. So now the challenge that traders face is that whenever they see a double bottom chart pattern, they say, okay, it's bullish, I must buy, and forget. No, 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 no. There's a challenge for the price. This level here is what we call the nut. All right. You see this zone here on top. So you have the double bottom pattern and this resistance here. The last lower high before the double bottom pattern is the nut. Okay. So for the bullish progression to become strong, for the bullish progression to continue, all right, the price must find a support above the nut. That's why I place my limit order just a little bit above the high of this candle on a daily chart at 1950. Okay, so you can understand, if I go back again to the 5-minute time frame, you can understand what's going through the mind of traders, because the bearish traders are selling in this zone, all right, because of the nut of the double bottom pattern on the daily chart. But there is a high chance that the price may breaks above the nut. So I'm a bit cautious, as I explained to you at the beginning of this video, that it's a bit tricky trade, risky trade. Now my order is going to be filled. Is it going to be filled? It's now 194985. Let's see. My friend is coming up beautifully. No, it didn't. Oh, yes. Waiting again, waiting for this order to be filled. Okay, so let's go back again to the daily chart as I'm waiting for my order to be filled. All right, so you see the nut here, it's a challenge, okay? So if you buy that's why you see a kind of consolidation here. You see how the price oscillating in the zone, all right? It's oscillating between the nut and this level of 1917, okay? All right? So if you want to buy at a support level, okay? So the nut is a resistance level, okay? So if you want to buy, now it's coming up. Let's go to the 5-minute time frame. My order is going to be filled today. All right. Because once my order is filled, I will set my stop loss, okay, right in front of you. This is a live trading. By the way, today is the 1st of March 2016, all right? And the time in London is 15:19 p.m. My order is now filled at 1950. Very good, beautiful, gorgeous, okay? 1950, we are now in this trade. Okay, you see now it's filled now. And the time in New York is 19 minutes past 10 a.m. Okay, New York has just opened. As I explained to traders, for day trading and swing trading, we wait. Now it goes above 1950. Beautiful, isn't it? Okay, so we wait for the first 30-minute candle to close. Professional will always do that, okay? So the first 30-minute candle is which one? This one here. So what a professional will do, all right, they will highlight the high, okay, of that 30-minute candle, especially if you are day trading, and it will also highlight the low of that candle, of that 30-minute candlestick bar. This is it. So we will become bullish. You see now it's going above my level nicely. You see here. So priority to bullish signal. So the first 30-minute candle, if the price finds support above the high, well, in the support zone, not in a resistance zone, all right, we give priority to bullish signal, okay? If it come back below the low of the 30-minute candle, all right, below a support level, we give priority to bearish signal, okay? Very simple, all right? So here we are. So on the 30-minute chart, we are above the high of the first 30-minute candle, and also we are above the nut. Remember what I'm calling nut is the last lower high, okay, before the double bottom chart pattern on the daily chart, okay? So I have a trading setup which is giving me confidence, okay, to buy, okay? But I'm prepared to take my profits at the pink line. You see the pink line here? Why do I want to take profit? Because this is just a quick trade. It's going to be like 12 pips. But if everything is fine, the price may go a little bit above the pink line to increase my profit. But if the price is finding a resistance near the pink line, I will close that trade very fast. What is the pink line? Oh, well, that's a very good question. Okay. All right, the pink line, okay, is the long-term equilibrium price level for the S&P 500. If you are an investor, you are a position trader, you must pay attention to the long-term equilibrium price level, okay, for the S&P 500, okay? You can't ignore that level at all throughout 2016, okay? It's a level, a very important key level that we have given to traders for free, all right, because this is our proprietary trading tool for myself, all right. The long-term equilibrium price level for S&P 500 is 1881. That's where am I? Why I color that line in pink? Because what's happening here? No, okay, now here we are. What's happening here? The pink line is a 1962. Remember, 1962 is the long-term equilibrium price level for the S&P 500, because I always like to color the long-term equilibrium price level in pink. So when I look at the chart like this, anywhere I am, I know that, okay, this is the long-term equilibrium price level. And the current short-term equilibrium price level that day traders and swing traders must watch is the orange line here, is 1881. 1881. All right, that's the orange line here. That's the current short-term equilibrium price level, because the short-term equilibrium price level is dynamic and can change after 2 weeks or so. But this is the first long-term equilibrium price level for the S&P 500 at 1962. All right, so as I bought it here at 1950, if the price coming near the long-term equilibrium price level, I will be prepared to close my trade with a very, very, okay, reasonable profit. Or if the price goes above it, okay, that's great. But we want to watch the reaction of the S&P 500 on here, all right, the long-term equilibrium price level at 1962, because, okay, the hedge fund, the big institution, are watching this price level. Will it go above it? Will it find a support above it? Okay, that will determine, okay, the future of this S&P 500, okay, for now, okay? It makes sense? In August or September 2016, I will be giving traders the second long-term equilibrium price level. I can't share that with you now, all right, for the S&P 500, okay? It makes sense? All right, so this is where we are. So my trading setup is a double bottom pattern, probably going above the nut, which is critical for the continuation of the bullish progression that has started here. All right, okay. So now I'm in this trade now, because this is for day trading purposes. I must monitor my trade carefully. All right, so you see now, so I did not violate the market pattern. So price is in a kind of above a rising trend line. We have, okay, a low and a higher low here. There is a resistance here, which I talked about already, but we are breaking above it now, which is great, all right? If the music has changed, well, the dance must change, okay? If it starts going down, I'll close that trade without blinking, all right? Looking at the commodity channel period 14 on a daily chart, we can see that the commodity channel, this is a beautiful indicator. The price form a double bottom chart pattern. The commodity channel part, look at this pattern. I want you to pay attention to this, okay? You have a double bottom chart pattern, which is this and this. The commodity channel index indicator, CCI indicator, now is forming a double bottom pattern at the second low. All right, is that a confirmation of this double bottom pattern? Well, maybe, but we are not trading the CCI, we are trading the price, so we keep our attention on the price, okay? All right, but the point I want to make, the CCI period 14 is above the zero line. Now, theoretically speaking, it means that the price must be above the moving average 14. You see here, the zero line represents the moving average 14 for the CCI 14. Okay, the zero line represents the moving average 20 for the CCI period 20, and so on and so on. All right, so here it is, it's above the zero line. It's also, you see, it's showing a consolidation that the price is oscillating above the moving average 14. But one thing I want you to pay attention to, whenever you are looking at moving averages, look at the slope of the moving average. it's coming near the pink line now. Can you see? The point now 1956. Still on the daily chart. So pay attention to the direction of the moving 14 is rising, yes or no? Will you agree? Okay, hold on, please. Let's bring the commodity channel down a bit, okay? All right? Okay. Moving on 14 is rising, yes or no? The moving on 14 is, can we talk about, is checking on the short-term momentum, is exposing the short-term momentum, all right? The short-term momentum is bullish, okay? This is it, all right? Okay? So I have a double bottom chart pattern and the price breaks above the nut. I'm buying for day trading purposes. This is my trading setup. The price is also in a rising channel, but a resistance is here. We are just above it. Hopefully, it will continue to go up to the next level, which is the long-term equilibrium price level at 1962. The commodity channel index period 14 is above the zero line, alerting that the price is above the moving average 14. Now we must check the slope of the moving average 14. But the CCI indicator is just giving us a warning. We are trading the price. We are concentrating the price. We don't want to repeat any of the 7 biggest trading mistakes. All right? A top-down trading method. All right? No violation of, the market environment. All right? No devaluation of support and resistance level. You see, there was a resistance here. I pay attention to it. If I want to buy near a resistance level, the price must go above that resistance level at least. All right. Sometimes trader will buy just below a resistance level, and the price will quickly change direction. Okay. All right. So I've been talking to you now. How long? For 60 minutes. Can you believe it? You didn't even feel it. Okay. But we don't want the video to be too long. So for live day trading, I will have to pause the video at one point, okay, with your permission, okay? All right. So my trade so far is gorgeous. My order has been filled and the price is above it nicely. So now let's set a stop loss for this trade, okay? So I'm on a 5-minute time frame. I want to use 5-minute time frame in this case to set my stop loss. So what I'm going to do, I'm going to pay attention to the price itself. There was a low here on the 5-minute time frame because it's a day trading. I don't want to use too much stop loss. Another low here on the 5-minute time frame and another low here. So what I will do, let's see, for 7 pips, 9 pips. Okay, I'll place my stop loss 39, 40. I'll use 11 pips. In fact, let's put it straight away to 18 pips, to 12 pips, okay? I'll put my stop loss at 12 pips, okay? 1938, okay? 12 pips, okay? 1938. I'm going to put a line there. Okay, I'm running out of color now. I don't know which colors. Let's use black line here. This is my stop loss here at 1938, okay? Here it is. So 12 pips for my stop loss. And I'm expecting also 12 pips minimum out of this trade. It's okay for day trading, okay? So I'm looking at the structure of the price on the 5-minute time frame. Okay, so this was a support level here, all right? So the support are protecting my bullish trade, okay? If it was a bearish trade, I will use resistance to protect my trade, all right? But okay, so this is the first support zone, okay? And then we have, okay, the neck, the nut of this. You see, this is what we're talking about. This is a fractal pattern. Can you see the fractal pattern? The price form a double bottom pattern on the 5-minute time frame. All right, and the nut is broken on the 5-minute time frame. The same scenario, go to www.dayprotrader.com, learn about fractal pattern. This is advanced trading. I can use this pattern here to forecast what the S&P 500 is likely to do on a daily chart. Okay, I don't want to go there because this is about CCI trading. I may record a video later on to forecast using a fractal pattern to forecast what the S&P 500 is likely to do on a daily chart, okay? But this is just a guidelines that we can follow, okay? It's not exactly, the price does not have to do our expectation, but if it's copying and pasting our expectation, so to speak, well, that's great for us, okay? So now you know the reason why I'm in this trade, which is very, very important. So whenever you buy or sell, ask yourself, why am I buying or selling? Okay? So let's go back again to the daily chart. The CCI displays a double bottom pattern and goes above, all right, the zero line. It's a bullish warning, all right? It's a bullish warning. We acknowledge the CCI period 14 on the daily chart, and we now pay attention to the price self, okay? The price also displays double bottom pattern, like the CCI here, and now it's breaking above the nut. So for us, because it's a bullish indication, we know that the best place to buy after a double bottom pattern is above the nut. For day trading purposes, if you want to buy, or swing trading purposes, you want to buy at a support level. The price at a resistance zone, we want it to go a little bit above the resistance at least, okay? If it's going up, the price looking for a better resistance level. So there is one resistance right above here, which is 1962. It's not any kind of resistance. It's the long-term equilibrium price level for the S&P 500. It makes it very, very interesting for us, okay? Now, because we are using the CCI period 14, we must also place on our charts, okay, the moving average 14. But we will pay attention only to the slope of the moving average 14, which is indicating to us, okay, the current short-term momentum, okay? All right? So I have a trading setup, okay, using the CCI period 14, all right? Now, I'm using a key level, which is the nuts, okay, in this zone here. In fact, the exact nut for the S&P 500 is at 1947. So I decided to buy above, the 3 pips above the nuts. All right? Now from the daily chart, I go to the 5-minute time frame. So one more thing I need to mention, on a daily chart, I want to make sure that I'm not violating the market pattern, okay? So the market pattern that is developing now, which is not yet clear, is what? A rising channel is developing, because we have to come out of the wood, so to speak. There are resistance on the left-hand side. So this is it. This is the current market pattern for the S&P 500. It's in a rising channel. So there was a low here. Now it retested here. It pulled back a bit here. Now we want to see whether this bullish momentum will continue. It will become strong if it finds support above, okay, the long-term equilibrium price level. But we need to be careful. If you stop only on the daily chart, because this is our trading setup, we also talk about validation of trading setup. In that case, we have to go to the weekly charts, all right, or monthly charts, okay, or quarterly chart to see the bigger picture. This is the bigger picture, okay? We have a rising channel, okay, and the price pull back here, and let's try to go back a bit up again. We will see this is the bigger picture, okay, where we are, what's going on, okay? So check out the video that I call How to Day or Swing Trade S&P 500 Stock Index in 2016 like a master, part 1 and part 2 at 2-4 stock trader, okay? All right, now this video will be posted at dayprotrader.com, at dayprotraders YouTube channel, because it is about CCI trading, all right? So CCI trading we post at dayprotraders YouTube channel, all right? Okay? So I have too many lines on my chart, but I need them on my chart. So I leave them there as it is, because as the price going up or down, I want to know where we are. This will allow me to navigate through the markets, okay? So validation of a trading setup is very, very important, okay? All right? So, but we don't want to violate the market pattern, okay? So here we are not violating the market pattern, and the price going up. We are watching the resistance levels, Okay. All right, it makes sense? So now I switch to the 5-minute time frame. And once again, on the 5-minute time frame, I don't want to violate the market pattern. Okay, what's happening on the 5-minute time frame? On the 5-minute time frame, we see a bullish progression. Here it is, a bullish progression from the 24th to the 26th of February. We have a bullish progression on the 5-minute time frame, and that resistance has bullish progression has taken out this resistance here in the zone of 1938, where my stop loss is. Okay, all right. But the line here, this is my entry here, is above a nut on the daily chart. This is a very important level. So there is a bullish progression that breaks above a very important key level on the daily chart. Now the price, you can see that as it goes above the level of 1950, there was some sellers here. Okay, there was seller here, there was seller here, and the price went back below the level of 1950. Okay, so first time it went below it. Now second time it went below it. But each time it goes below it, there are people buying to push it back above it. So first time they push it above it. Second time they are pushing it above it. I want to be part of it. I don't want to be the first person to buy. I want to join those who are buying first. So it did below that level. They bought it. My price returned back below it. Now it went back above it. Now we buy it again here. But we are facing a bit of challenge. So on the 5-minute time frame, we have bullish progression and then a pullback. Okay. All right. This is a kind of a triangle here. All right. If you like to call it triangle. So bullish progression breaks above a key level, okay, which is 1950. All right. And now, are you following me? Bullish progression on the 5-minute time frame, pull back, and also breaking above it now. We can buy, okay? Price form also a double bottom here on the 5-minute time frame. I want to buy. But we are facing a bit of challenge. That's why I said to you at the beginning of this video that it's a bit tricky trade because we don't have enough room for the price. What do I mean by that? Okay, let's go back to the daily chart. You can see that on the daily chart, the pink line, which is the long-term equilibrium price level, is only 12 pips from my entry. So I have a resistance that is not too far from my entry. That's why I say to you that it's a bit risky trade. But I want to give it a bit of chance because I'm risking 12 pips and I want to also get a little bit more than 12 pips out of this trade. So, okay, I'm aware of the risk, but I want to give it a chance. Okay, you understand? So I'm going to go back again to the 5-minute time frame. All right. And, well, it's time. I have to pause the video at this point. And I will come back to it and show you whether I have been kicked out of this trade or whether I get something out of this trade, okay? All right? So, but before I pause the video for the first time, I want to place a vertical line there, which I usually call also, I will call it in turquoise, a vertical line for live day trading, S&P 500 using the CCI indicator or the commodity channel index indicator. So we are pausing the video now, and the time in London is 15:40 p.m. in New York at 10:40 a.m. So pausing the video for the first time after 28 minutes recording. Well. And to avoid that the video is too long, let's pause it. I will come back to it and see whether, okay, everything was fine or not. Okay, so speak to you soon. Okay, traders, we pause the video here. As you can see where I place the vertical turquoise line. And since then, you can see the price went down to retest the moving average 14. And now it's going back up. There is a resistance here on the 5-minute time frame. So the price must go above the level of 1957 before it can continue to go up more. Remember that there is the long-term equilibrium price level just a little bit ahead of the price right now. We can't see it on the 10-minute time frame. Let's go to the 30-minute time frame. Where is it? I'm looking for the pink line. Hourly chart. Where is it? It's not here. Okay, I'm going to go to the 4-hour chart hopefully, yeah, that's it. The pink line is there, 1962. So the price must go above it. That's why traders are selling here. Hopefully, we'll go above it. Okay, my expectation is that it will go above it. Okay, hopefully, all right. So that's what's happening now. Just to update you guys about what's happening here. Okay, the time in London is now 11 minutes past 4 p.m. Okay, in New York, 11 minutes past 11. Okay, pause in the video for the second time. Okay, so speak to you very soon now. Okay, traders, what's happening here? We are very close to the level of 1962, which is the long-term equilibrium price level. I will close my first trade with 10 pips. That's not bad. And what I will do, I will wait for the price to go above, okay, the pink line, okay? So you see here, it's now very close to it, which is the long-term equilibrium price level. So what I will do, I'll wait until the price goes above the pink line and then find a support, and then I will take it from there. I believe that it should go up more, but we can't just ignore, okay, the long-term equilibrium price level at this point in time, okay? So just to tell you that I'm out of this trade now, but I'm still hanging around, waiting for another opportunity, okay, to buy for the second time if the price finds support, okay, above, okay, the pink line. What I will do now, I'll switch back to my daily chart, and I will be monitoring the reaction of the price right here. If anything is ready for me to take, I will take the trade, and I will show you what's happening here, okay? So you can see that it was not easy trade because the entry was quite close to this resistance here, and there were some traders selling near the long-term equilibrium price level. So we need to wait a bit more and let other traders push it above, and then wait until we have another chance, okay, to enter the trade, okay? If you look carefully now on the 5-minute time frame, okay, it's still going up, okay? It's still going up. So we will wait and see. Let them break through fast, and then we'll come back and see. Another thing that you can do if you don't want to close the trade as I did now, you can move your stop loss a little bit up to secure some of your gain and let it run. But I don't want to do that. I'm out of it now, and I'll come back later, okay? So let's pause the video for a third time, and I'll come back to it if there's something going on. Otherwise, we'll wrap it up at this point in time, okay? So speak to you soon. Okay, traders, next step, what are we doing? Okay, because the price is now above, okay, the level of 1962, which is the long-term equilibrium price level. And my plan is that I want to buy again the S&P 500 today, but only and only if, okay, it finds support above this blue line here, which I'm going to call out now on the 5-minute time frame, okay, into orange. So my plan is that we want the S&P 500 to find a support, something like this, to pull back. I would prefer it even to go a little bit below the orange line. That will give me more assurance, okay, before going back above it. And if that scenario is happening on the 5-minute time frame, I will buy the S&P 500 again. But as it's going up in straight line like this, I want to wait a little bit more. I may miss, okay, a good opportunity, but it doesn't matter for me. The most important thing is that, okay, I will see a bit of pullback before I join this bullish progression, because we have a breakout, okay, on the daily chart. So once again, let's pause the video. If you look on the daily chart, it's now above the long-term equilibrium price level. The S&P 500 today is the 1st of March 2016. This is a live recording talking about live day trading S&P 500 using the CCI period 14. Okay, so this is it. So if there is no opportunity today, tomorrow we'll come back again and see whether we'll have another chance to enter the trade. But just to tell you what is likely to take place, if, I repeat, this is very important because this video is for educational purposes only, is not, okay, an invitation to buy or sell the S&P 500. If the bullish momentum becomes strong and the price finds support above the level of 1962, professional will measure the depth of the double bottom chart pattern and will project it to the upside, setting a greedy target in the zone of 2079. That remains to be seen. Okay, this is what's happening here. This is my plan. So I'm going to go back again and pause the video, and I will be waiting patiently here. The time of the day is not very good anymore because we have passed the first 2 hours. Okay, when New York is open, so it's now 17:11 in London. That's 11 minutes past 5 p.m. in London. In New York, 11 minutes past 12 p.m. This is the lunch time. This is what we call the gap period, where you see some funny, trading setup, but usually they are useless trading setup, okay? So we need to be very gentle here and be very, very cautious how we trade, around this time, okay? So I'm aware of it, but I'm just waiting for a pullback, and then sometimes it will be great, even going below the orange line before going back above it, and I will take it from there, okay? All right, so let's pause it again and see if there's a chance or not. Otherwise, we'll close the video and call it a day today. Okay, thank you for watching, and I will speak to you very shortly. Okay, traders, let's wrap it up because the time in London is now 40 minutes past 5 p.m. In New York, 40 minutes past 12 p.m. Okay, so that's it for today. So to wrap it up, I would say to trader, what's happening here? All right. On the daily chart, we have noticed a bullish formation. The CCI period 14, displayed a double bottom chart pattern and a cross above the zero line here. This is a bullish warning for us that the S&P 500 has a high chance to go up, okay? Now, we switch our attention away from the commodity channel index because we are not trading the CCI itself. The CCI does not give us a direct signal. We acknowledge the warning. Now we must now switch our attention completely to the price, okay? Now let's go back to the chart. We see a double bottom chart pattern. So a double bottom chart pattern is usually formed at the end of a downtrend at a valid support level. The key level that we are watching is 1845. It's a key level, all right, which I mentioned to you before. All right, it's a very important key level. That's where the double bottom chart pattern has been formed. As the price going up, the double bottom will become completely bullish if the price breaks above the NAT. This is critical, okay? So that's why for this information that the CCF period 14 has given us a bullish formation. For day trading purposes, I'll switch from the daily chart to the 5-minute time frame, and I place a limit order at 1950, 3 pips above the NAT, all right, the NAT of the double bottom chart pattern on the daily chart, 3 pips above the NAT at 1950. I waited a bit and the order was filled here, and I took 10 pip profits as the price was approaching the long-term equilibrium price level. Right now, the price above the long-term equilibrium price level. The best scenario is a pullback a little bit below the orange line and then to go back above it. That remains to be seen. Looking at the time of the day for day trading purposes, this is not the best time for day trading. We will see what will happen later on. If there is a chance to re-enter this trend, I may record another second video to show you what's happening here. But the bottom line is that we must find first, a high probability CCI trading setup, and then we will switch our attention to the price, without violating the market pattern. It was a great trade, a bit difficult trade, a bit risky trade, I meant, And on the daily chart, we did not violate the market pattern, as you can see here. All right, we'll see tomorrow if the price will find a support above the level of 1962, which is a very important key level. If we find a support there, the next key level is 1994. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about live day trading, S&P 500, using the CCI period 14. Last thing, When one is using the CCI period 14, one must also place on the chart the moving average 14 and pay attention to the slope of the moving average 14. Happy trading to you all, and we will speak to you very soon. If you have any question, put in the comment section, and in due course, we'll record another video to answer your specific question.